Over the long term, real wages of our workers have risen broadly in line with productivity improvements. Since 2000, our productivity grew at about 1.7% per annum, while real total wages grew at about a comparable rate of about 1.6% per annum. While real wage growth may not match productivity growth in each and every year, the two tend to be consistent over the long term. However, our approach is not merely to leave things to the market or to chance. We are dedicating extra effort and resources to ensure that our lower income groups benefit from the economic restructuring and future growth. Indeed, our lower and middle income Singaporeans must be the main beneficiaries as we restructure our economy over the next decade. Now let me go into more specifics about how specific strategies can help low-wage workers. First, we're helping low-wage workers to stay in their jobs by helping them upgrade their skills, helping employers to pay them higher wages. We do this through Workfare Income Supplement Scheme, or the WIS scheme, the Workfare Training Support, or the WTS scheme, and the Special Employment Credit. In 2011 alone, for example, WTS helped 50,000 lower wage workers undergo training and enhance their skills and their employability. Importantly, we now provide a special employment credit to employers of older workers. This is significant as a large proportion of our lower wage workers are in fact older workers. Since SEC increases along with wages, it actually helps employers raise wages and reward their workers in turn. Our second strategy is focused on specific occupations and industries. A key way to do this is through the Inclusive Growth Program, or the IGP, which is led by NTUC. This addresses Ms. Sylvia Lim's question about whether we have specific solutions tailored for industries where wages have lagged. Indeed, this is the approach taken. The IGP will be focusing especially on sectors where wages have lagged, such as the cleaning, the F&B, and the retail sector. In return for the IGP support, companies are required to share productivity gains with their lower wage workers. We have recently increased government funding to expand this IGP program to benefit a total of 100,000 lower wage workers by 2015. A further aspect of our targeted approach is to tackle this issue of cheap sourcing. The cleaning and security sectors are good examples where we face this problem. We will be taking steps to support best sourcing for cleaning and security services, and also to tighten industry regulations and accreditation frameworks to raise standards and enable workers in these sectors to enjoy better employment terms. This will include a requirement for cleaners employed in accredited companies to receive appropriate wages commensurate with the higher training and standards and productivity required of accredited companies. The details are being finalized, and we will announce this shortly. To summarize, we are addressing the problem of low wage through a multi-pronged approach. First, broad-based approaches to improve productivity, skills, and incomes. And second, targeted approaches that address issues specific to certain sectors. Not just economy-wide incentives, but industry by industry, company by company, working on a tripartite basis to put in place very practical and concrete plans to restructure companies' operations, upgrade their jobs, and tie in wage gains with productivity improvements. Both are intensive efforts and are already in motion. They are practical and sustainable ways in which we can uplift incomes for low-wage workers.